Hey guys, what's good? I'm Andre, and after a little bit of a break, I'm back, guys. Now, life got a bit too busy for me between the recession and everything else. I own a business. I wanted to make sure that the business was all good, secure, so I had to take a step back from YouTubing, but I'm back and hopefully I'm gonna be able to dedicate a bit more time moving forward. But yeah, today I want to talk to you all about the VIX, so let's jump right in, and I want to show you guys why it might be a really good time to look at the VIX. So for anybody that's too new, the VIX is also called the fear index. Now, what it actually does is that it tracks volatility within the market. The relationship, so quite contrary to belief, actually, the relationship that it has with the S&P and with the Nasdaq is not necessarily inverse. We can have a day where the VIX is going high while the S&P is going up as well. So it does not mean that every single up day for the markets is a down day for the VIX and the other way around. But usually what tends to happen, obviously, is that when big sell-offs in the market are happening, obviously the VIX is elevated, volatility is really high. And so what I want to show you guys here is that within the VIX history, sort of, you can spot some trading ranges, and obviously we're gonna be ignoring the COVID sort of insanity that happened here, because that's very atypical to how the VIX is trading. If you guys spot though, the rest of 2020 after COVID pretty much traded in a range. Now we went into 2021 where everything was kind of fabulous for stocks, and as you guys can see, the range was quite a bit lower. Actually, this top side of the range that I drew here was a bit exaggerated. This is the more normalized range that the VIX traded into. And now we're moving into 2022. Things are a bit crazier than they have been in 2021, and so the range that we have in 2022 is a bit more elevated as well. So I think that anybody that's been in the market for more than a week is probably gonna look at this and say, cool, we're near the top, how do we trade this? And that's a very good way to think about things. And I want to make sure that you guys understand that this might be the peak, it might not. This is not trading advice. Do your own due diligence and assess things. But from my point of view, we are at a peak sort of absurdity moment where a lot of stocks that are really important have been beaten down 30, 40, 50%. Google, Amazon, Apple, Disney, they're trading below $100, which is just insane when you're thinking about it. And I want to look at this and try to trade it for a swing trade. This is what it's gonna be. So how do we trade it, guys? Because the VIX is not a stock that you can buy or sell or short sell. You need to use options, and with options you then need to think about theta, you need to think about expiration dates. It just overcomplicates things quite a lot for the beginner trader. Well, that's why we have a couple of ETFs, guys. They're called UVXY and SVXY. As you can imagine, one of them is bullish, one of them is bearish. Or to put it in simpler terms, one of them follows the VIX while the other one trades inverse to the VIX, basically. And SVXY is the guy that's trading inverse to the VIX, guys. And to keep things extremely easy for you, or as easy as they can be, I wanted to show you guys what it would mean to invest in SVXY at this very moment when we know that the VIX is at highs, right? So if we were to just judge by the recent trading range that the VIX has had, you can see that we have roughly 16% of upside in SVXY. Now, there's not a lot of downsides, guys. I have to admit, I have to be honest with you. You can buy the Qs, and then the Qs might not move higher or might not move to all-time highs for, I don't know, a year, 2 years. Maybe we go into an extreme bearish pattern and it might not go that high for even longer. But if you look at the VIX, it always does this sort of barcode movement where it spikes higher, things calm down, and it goes lower. So I would just encourage you guys to do some research. From my point of view, it's a fantastic time to be averaging into SVXY. Maybe you don't want to go with your full position, but if you guys want to do a quick swing trade and capture 10% of this 16% move, it's a fantastic time to open a position here, wait it out, wait for things to calm down a bit more, and then you can increase your position. So I would be starting with something around 15% of what I'm planning to invest. Let's say you want to invest $1,000 in total. You can start by investing $150 or $200 into it right now. Wait to see how the next few days are gonna be panning out, or how the next couple of weeks are gonna be panning out, and then add to your position if and when it makes sense for you to double down. That's kind of it, guys. Let me know if you have any questions. So again, SVXY is the one that's going low when the VIX is moving up, and the other way around with UVXY. So with UVXY, it simply tracks the VIX. As you guys can see, UVXY is now moving up with the VIX. Now, I do not recommend buying UVXY because it's much harder to predict the market going crazy than it is to predict the market calming down. And now we are in a time when the market is crazy. So it's easy to think about the fact that in the near or mid-term future, sort of, let's say 4-6 months, things are going to calm down with the Ukraine war, with the inflation rate in the US, with everything really, and the VIX is going to normalize again back down to 20, 22, perhaps even lower. And so that's why I'm encouraging you guys to learn about SVXY. I think it's a fantastic tool to have in your arsenal as things start hopefully moving back into a positive direction with the markets. Now, that kind of covers it for today, guys. If you learned anything here, please drop a thumbs up. If you want to support the channel, go to my Patreon page, and there are a couple of perks in there. And I'm gonna catch you guys next time. Take care.